Hello my friends, it's Peter from Freedom Formula Property Investing. And today I'm going to be talking about one of the biggest things to happen to the housing market in Australia in the past decade. And it's to do with Labor winning the election. What Labor has promised to do for the property market is absolutely unreal. And I'm excited to dive into it because it's going to affect so many people. Because what we were looking at is interest rates were starting to go up. There was a lot of talk about the cost of living. There are a lot of issues around this. And both Labor and Liberal had different ways that they were going to help people to enter the property market. And the way that the Labor government has promised to do it, which is absolutely nuts and is going to have a crazy impact, I believe is possible that we will see house prices continue to increase in one band in particular. So stay around for this video, like and subscribe. We're going to be posting 2 to 3 videos like this every single week, as well as shorts every single day. We're going to jump into this now. Stick around to the end. So if we look here, this is what Labor is promising to do for the Australian market. Firstly, this is going to be 10,000 homes every single year. This is massive. This is not a small scheme. And what are they going to be doing? They're going to be offering to pay for 40% of the cost of that home. So the government is going to own part of that. And what that means is people are going to need a smaller deposit and a smaller mortgage, which means that they can afford to be buying a more expensive house to live in. Now, if we scroll down, we can understand that yes, there is now a significant decreased proportion of people who are owning homes now compared to say 20, 30 years ago. Something needed to happen, and the government, what they really wanted to say, or what they really wanted to do here, was to stop house prices going way too high. But the issue with what they're doing, if they're paying for some of this and people are chipping in a little bit of their own money and they can go for a larger property or a more expensive property, is it means it pushes people up the next price band to the limits that the government has set. And so there's going to be more competition for those houses. And what I think is going to happen is you're going to see property prices actually accelerate because of this program. So the program designed to help with the cost of living and to help people buy property is actually going to increase the rise of the price of property. So how does this actually work? So if we scroll down a little bit here, what you'll see is that this would mean for a home buyer in Sydney buying the maximum price cap of $950,000. I'll go down to the price cap for each state in a second. With 40% equity, monthly mortgage repayments would be over $1,600 cheaper. Right, that's $400 a week. That's a big difference in serviceability. So when the banks are looking at this, people will be able to push for more. In Queensland, for someone buying the maximum price cap of $500,000 with 40% equity, it means they're saving $850 a month. That is a lot of money to be saving a month. When the banks are looking at that, they're looking at the serviceability, especially with interest rates rising like they are at the moment. It's really going to help people to buy a house that currently is out of their reach. And that's important. And this is going to be across every single state as well. And different states are going to have different amounts, and we'll get to that in a second. But who's eligible for this? This is important, right? Australian citizens at least 18 years of age, earning $90,000 or less for an individual or $120,000 or less for a couple, live in the purchased home as your principal place of residence, not own any other land or property, minimum 2% deposit. That's risky, that's crazy. And pay for any associated purchase costs, etc., etc. So a lot of people are asking, and I'll post this afterwards so you can check this out yourself, what are the property price caps? So you can see for a state like South Australia, $550,000 for a capital city, $400,000 for the rural centres, compared to obviously New South Wales, $950K in the capital city and $600K rurally. And so you can see here, maximum saving on a new home purchase. In New South Wales, if you're buying near Sydney, $380,000. That's a lot of money to be saving. And realistically, this can just push properties up that exact price, right? Because if everyone on this sort of level jumps in, it just pushes things up. So you're going to see a lot of properties that were maybe worth $750, $800 go straight up to $950, I believe. So as you can see, this is a very interesting strategy. And I'm looking forward to seeing what happens over the next 2 or 3 years as this is implemented. And currently, I'm looking at a lot of people who are looking at buying around that price range to get in quickly because they can see that they believe that market is going to go up. Now, importantly here is we don't want to be looking at the market over the short term. We want to be looking at the market over the long term. And whilst you may see some fluctuations up and down, and with interest rates rising, we do expect there to be some pressure, especially on houses that are outside of this price band. But understanding the type of investment that you're doing, the type of properties you're investing in, and personally, I'm always looking for properties that are around that affordable level, that are probably slightly less than each of these price property caps in each of these major cities, because that is where the median house price is going to be. And buying around that means that in good times, people are raising up to that, so they're able to earn more, they're able to borrow more, they can get one of those properties. And in tougher times, people actually get pushed down from the higher property brackets. So someone who was maybe in South Australia buying a property for $700,000 is now looking around the $500,000, right? So you're either going to be pushing people up into that bracket or down into that bracket. And that's an affordable housing bracket. And that is the kind of properties that I like to look at for my own portfolio. And looking at this, I believe it's just going to make that even more in demand. I look forward to seeing you in the next video, my friends.